I'm your host Steve, and today I'm going to be going over the trade of the week, which was NFLX, which was actually, it was a 2-day trade. It netted the trade that I had gotten in the position for $34 and ended up selling when it reached $480. It came out to be something like 1,303% gain, and I will show you how I spotted that and when I just rode that stock up. And then we have our stocks to watch for the week, and those are SPY, Apple, Tesla, and NFLX. Okay, so let's begin. Alright, here's our NFLX chart, and I have it set. This was a 2-day trade. It was over the 4th and the 5th, and I have it set at 10 because this is about the time that I had gotten into this trade. Real quick, it's gonna detach. There we go. Okay. Okay. Now that I have this all set, just pull up the NFLX option chains. Alright. Now this is gonna be an issue now. See, I won't exactly be able to show this trade because the on-demand platform will only list up to 14 strikes at the time of whatever the stock price is. I had gotten in a 124 call, and I mean it's way out of the money. So it won't exactly show up. But let me talk about how I got into this trade. And I actually got into it when it was trading about 118, 119. So let me fast forward this just a little bit. I'll do noon. Okay. So I got into it around 11:30. Okay. Okay, so now the reason why, let's see, the 123s show up. Okay. Now the reason why I got into this trade was the time. So I was riding 115. Now this huge up move dropped. It actually bounced a little above 115 and started taking off again. Now 124 was really out of the way, but in the past, like NFLX was just on a roll. I mean, earlier in the week, or in the past week, it was down 104. From 104 to 118. And on average, it was averaging about 4 to 6 points a move. So that is when I had ended up getting in this trade. So now let's go ahead. I guess I'm not really gonna just play it because I can't really technically get in this position yet. So what I'll do is I'll fast forward it like this every 10-15 minutes or so. Alright. So now what's going on? So we had this bounce. Alright. So now if we go every 10 minutes or so out, something happening here. Alright, let's draw a trend line. Okay. Ah, dang it. Okay. So what this pattern right here, this is a bullish pattern, meaning that more than likely there is going to be a breakout. And sure enough, there was. And and then there was a little pullback. Alright. So now I'm going to fast forward this. Oh, hold on. Now here's another formation. It's not exactly a full one just yet, but it's a cup and handle formation. There you can say it's completed. So that was at about 140, 150. Alright, now I'm going to bring this to the end of the day. Alright. Start to the end of the day now. And there was a little bit of some interesting after market activity. Let's see, I'll just take it. Okay. There. Okay. Now, the pattern that I had showed back here, the huge breakout. Well, the same thing happened right in here during after hours. Now, the only difference with this one, though, and the only difference with this one is technically how, at least how it's written on, like, like chart flashcards or however you want to call it, or whatever you want to look at. Technically, this came in from the top down into this formation. So technically that would have meant here, instead of a breakout, it should have actually dropped. Here we have just a change of hands, I believe. This is all in a minute. But it continued its run all the way after hours and then into the pre-market. It reached a high of 126. So fast forward into the open, and this is when I ended up getting out of the position. I didn't get it at the absolute high. Probably ended up selling between 128.50 and 128. That is how this position started. That is how I spotted this position to get into the trade. Got into it at here. I saw the bullish pattern forming, and it just ended up taking off. Now the 124, that was a little out there. I mean, I probably could have gotten into that trade at like the 118 or the 119. But that was it was a very, I don't know, I guess a high reward, very low risk trade. Normally stuff like that doesn't really happen though. Always try going close to in the money. That one was a lot of long shot, pretty much. Okay, so that's it. That is it for the stock of the week. And now let's talk about the stocks to watch for the week ending August 14th. Alright. First up, we have SPY. Now, you can see we're kind of starting somewhat of a downtrend. Getting closer and closer to September. The Fed keeps hinting at interest rate hikes. Job report, I guess it had met expectations. So what that means for investors is more than likely the Fed will be increasing interest rates in the future, and that will in turn send the markets down. But, alright, Friday we have this hammer candle. So we're expecting a little bit of a bounce, depending on how the markets hold on Monday, and how this bounce goes. If it is just a bounce, then we should see some more downside. I'll just say 206.79, or possibly down into the 204.51 to 205.42 range. So all the indicators are pointing bearish or very bearish. The RSI is pretty much dead middle, or it's a little under. So pretty much we're just relying on what happens Monday. before we can get an idea of where the markets will be heading for the rest of the week. Next up, we have Apple. Apple has finally broken out of this channel, but for bad. It even fell below. It fell below all the averages as well. So this one, I mean, if we get a bounce tomorrow, this could possibly get back over the 5-day. Maybe we could visit the 13-day, which also just happens to be very close to a 119.95 resistance. I can see us closing in between 116.31 and 119.95 if the markets bounce. If not, maybe 110, 105. It's really hard to say at this point. Said we'll have to see what the markets do. Alright, next we have Tesla. This is also showing a hammer. So we might be able to get a bounce up to 156.75. That's a huge resistance. And if it fails, downside, we are looking at 221.38. That would be a pretty huge move down. But that's also, I would expect that to be a little more stronger of a resistance point than what's listing here, which is 3. And of course all the indicators on it are pointing very bearish or neutral. So looking to the downside on that one, but again, depends how the stage is set Monday. Finally, we have Netflix. Netflix has been, as I showed you, it's been on a rip. Has this gap. It didn't even fill the gap and just started taking off again. And still all the indicators are pointing very bullish on this. It did bounce off the 5-day, so we could see 127. It breaks through that. Who knows? 130, 135, maybe 140. Again, that's 140 is on the extremely optimistic side, but there's nothing really here showing that it's going to continue its down move. And there's a doji right there, but here's that move, and it bounced off that low. So I don't know, we could see possibly 130 by end of this week. So that's it for the stocks of the week. Also too, for those of you that use TD Ameritrade, either the Thinkorswim platform or the TD Mobile to do your trades. I just recently started. I had learned how to do credit spreads. like on the SPY and things like that. So what you can do is, if you sign up to dough.com and create an account, get everything going, if you don't have the ability to trade options already, go through their dojo course, and it will give you access to, when you finish this, you can then trade options. I don't know if it's covered calls or puts, or it's basic calls and puts, meaning you don't need to have the shares to do it. But by going through this course, you will be able to get access to trading options. Now what I'm about to show is tier 2. So you have to apply for it to get it. It technically requires margin, even though I don't plan on using margin doing these. But so you have a TD account, create an account at Dough, and then when you sign in up top here, it'll ask you for your username and password. And what that does is it links to the TD Ameritrade, your account there, and you can do all your trading on here. Now why I bring this up is because the Thinkorswim app or platform can be very confusing if you're just starting to do spreads, credit spreads. Now what I'm going to do is I click on the trade tab, and I plan on doing spreads on the SPY. So if I go over to strategies, I plan on doing credit spreads. So a credit spread is pretty much you are selling the option that is closer to the in the money price, and you are buying the one that is further out. Alright, so plan on doing that. There we go. Okay, I plan on doing the weeklies. And the total width, 2. So this means that, say I had set, well, I'll show you. Okay, so the width 2 means I have a $2 difference between these two strikes. And depending on how Monday goes, if we have a bounce but it doesn't sustain and we start going back down, then I am going to, depending on what the price ends, I'm going to do a spread $2 past whatever the price is. So say we had that bounce and we started falling, and it started being, this was the price, like 207. So then I would set, there. So then I would set this up at 209.50 and 211.50. So I'm selling the 209.50 and I'm buying the 211.50. That's $2 away from this, and it's like on the chart, it's signaling a down move. So this probability of profit will increase, and it's already at a 73%. And I'll be netting $51. So let's do 2 contracts. Okay. There we go. For some reason, when you change the pricing, it messes this whole thing up. None of this should change if you change the contracts. Okay. So this tells you everything that's going to happen. Okay. So this is saying that it's going to cost me $298 to get in this trade, which, as you can see right here, it says 76.69. That isn't accurate. I have positions that I'm in right now, and I have more funds that are coming over, so don't worry about that. But this is saying that it's going to cost me, out of my buying power, $298, and my commission to get into the trade will be $6, which round trip this is going to be $12, because it's $1.50 per contract. Which also, if you're new and you have signed up with Doe, you can call up TD Ameritrade and you can ask them to do this for you. You tell them that you want the Doe rate, and if you trade, what is it, it's like 10 or less contracts, because the Doe rate is a flat $1.50 fee per contract, where the standard TD rate is something like $7.99 plus 75 cents per contract. So after you go above, what is it? It's either like 10 through 13 contracts, something like that. The standard rate actually becomes cheaper rather than the Doe rate. So this is meant for those that are brand new, just getting your feet wet, or those that are just trading small. Alright, so this is telling me all the details. This is saying that I can get $102 profit, or $102 credit, minus the transaction cost, so 102 minus 12. That means I should walk away with this trade for $90. This is telling you if the price of SPY winds up being less than 210.01, my maximum profit will be 102. But if it ends up going above, greater than or equal to 210.01, my max loss will be 298. And basing on whatever happens Monday, if we get a bounce and it doesn't show that it can hold it and sustain it and it starts heading down, well, then I have a very good likelihood of netting, in this case, technically $90. Theta will be $10 a day, so I guess that's technically then 20. I'll be getting $20 a day because I have 2 contracts. And the positions will be expiring that Friday. So that is pretty much how you go ahead and do a credit spread using Doe, which, like I said, it's a lot easier setting it up through here. It's a lot more eye candy friendly, I guess you could say. So that's something to look into. And that about does it for today's episode of Dissect the Trade. Thank you for watching. If you have any questions, comments, please feel free to comment in the section below. Also post a link to subscribe right here. And also in the description there will be a link where you can join us at the Facebook group Options Traders United. It's a great group. Got just I believe it's at 200 members or so at the moment. Everyone contributes. It's a pretty good, tight-knit group. So something to look into. That's it for today. Good luck trading next week, and until next time.